All right. Good morning, everybody. Today is the 11th of December. We got Thursday for you. Today we're looking at the SPY, the 5 minutes chart. Interesting session because you have the contrast between Oracle and then, hey, the Fed just cut rates and they're going to do quantitative easing. Which narrative is going to win in today's session? This is what we're going to discuss here in tonight's stream. But, folks, before we begin, give us a feedback on the picture and the sound. If you can hear me fine, look at the picture and see everything fine. SPY, 5 minutes chart. We're looking at 685, 686 really. If everything is fine, just give me a thumbs up and we're going to begin right away. Okay, thank you so much. Let's begin here with the SPY. It is sort of standard behavior that they don't like to leave gaps open like this. So they're going to try to, by default, to try to close it. But that's going to depend on Bitcoin. That's going to depend, of course, on how Oracle is going to trade in a minute. We'll look at that. But when you have a gap like this, they're going to try at least visually to try to reach and close that gap. That's what traders do. The problem is they're looking at Bitcoin, and right now the algorithms are really looking as if Bitcoin goes up, you see the SPY going up. If Bitcoin begins to pull back, you see the SPY pulling back. So it's kind of crazy that Bitcoin is really dominating everything that we see in the market today. When we look at Bitcoin here, an hourly chart, they're trying to defend that 90,000 level hard, because if that's lost, if we have a give up, it's going to be a give up in a form of a flush. It's going to be a big one. It could lead us all the way down to 84, 85. Could be 5,000 points shaved off right here in one shot. So this is why they're trying to defend 90,000 really, really hard. So you look at the SPY now weakening as we see weakness in BTC, but you look at NVIDIA, that name is down. Not sure what that new window is right here, but anyways, kind of distracting. But we're down 3.5% in NVIDIA today. So you're beginning to see that contagion effect that if Oracle is having a problem, then OpenAI has a problem. And if OpenAI has a problem, then everybody who has a deal with OpenAI is going to have a problem. And therefore, you have AMD down, you have NVIDIA down. Of course, Oracle right now down about 13.5%. We talked about the target yesterday, lower Bollinger Bands. We'll see if that's going to hold or not. It should hold at least for today, for Friday. But once the Bollinger Bands begin to expand, I think that we see more downside to come in Oracle. And I see is that we're going to settle down at about the 155 line. That's going to be next year, though, not this year. So that's Oracle for you. Apple, on the other hand, is also in the weaker side, even though Apple doesn't have any relationship with OpenAI, but we see a sell-off regardless here in technology. Microsoft is also in the weaker side. Tesla is in the weaker side. That depends on Bitcoin, really. If Bitcoin is going down, it's going to take everything down with it, including Tesla, but most importantly, NVIDIA. Tesla, those are two really sensitive to Bitcoin because the holders are the same. Now, you look at the IWM, no problem here, right? IWM got a confirmation, so we have to go back to yesterday's video. It's one of the most important videos we put out this year. You got to look at that guideline because you have the 2-year. That's at least for now heading down, and that's giving you confirmation that, okay, the small caps are fine, and probably the KRE is fine, and XBI kind of lagged, but it's moving higher today. So you see that the 2-year is giving you a signal for risk on in these assets. Now, if we look at the 10, it's also down a touch. So that's going to be pretty good for some of the dividend-paying names in healthcare, the financials. Some of the dividend-paying names here that you see in the staples are moving pretty good. You see some real estate moving up, some utilities. So the breadth in the market is pretty good. It's just the weakness that we see in technology. And of course, the last thing we want to look at, because you see gold miners here doing pretty good today. So if we look at Dixie, you're going to notice that Dixie is now flushing down and giving us confirmation that the reaction from yesterday was correct. It was not a knee-jerk reaction. We have a confirmation right now, which means that's your permission to go risk on in some of these assets, such as if you're going to go aluminum, look at Alcoa today. That's up about 5%. If you look at FCX Copper, that is up about over 3.25%. If you look at GDX Gold Miners, this guy's up over 3%. If you look at Palladium, for example, not up as much, but Palladium is still in the green today, so that counts. And then if you look at Lithium, for example, ALB, that's doing okay today. If you look at some of the resources like Mosaic, that's finally beginning to recover today. So 7% to the upside, that's what we like to see here. So it's if you just follow the guidelines, folks, you're going to be fine, because that's all what you need to know about the market. I'm going to leave it at the RWM here because I'm watching it in my watch list. I'm looking at Bitcoin. I'm looking at the SPY, NVIDIA, Oracle, all of these important charts to look at today. The VIX, anything in the VIX today, I don't think that we have anything significant in the VIX. The VIX is saying right now that we have a problem in technology, limited to technology, but the rest of the market is fine. So that's what the VIX is saying. Now, my 2 cents is the VIX will probably going to go back like a magnet to 17. It has to go to 17 because that's the neutral zone for the VIX, given the circumstances that we have in the market right now. Now, what about the options activities? Because that's going to begin to become more relevant now that we've already absorbed the Fed and Oracle. Now it's going to become, okay, what about the options market? So if we do that, we'll look at today's expiration, the 11th. You see that the open interest in the calls is healthy. Same goes for the puts, although higher volume in the puts. In the OI change, and this is why we see the market heading down initially. Next thing you want to see is the volume. The actual volume for today looks pretty good for the puts. Looks pretty good for the calls, but concentrated. It's concentrated in 85 and 86. When I see that kind of concentration, but we see the puts spreading across multiple strikes, it becomes more risky for the market maker when you have this kind of formation versus this, when you have concentration in just 2 strikes. So my 2 cents, if I want to exercise maximum pain in the calls, I mean, already most of them are in the red already. But if you want to eliminate the open interest for today, you push the tape just a touch below 685. That's going to allow you to eliminate all of these big numbers that you see right here in the open interest. Now, you go to 685 or below, what is the consequence in the puts? Not much. It's about 9,000 contracts. So I think that 85 is probably going to be the sort of maximum pain neutral zone that the market maker wants to hover around. But as the volume develops, we'll see who's going to win the battle of the volume. If the puts continue to add, then the market maker might face the possibility of a squeeze all the way down 83, perhaps 680. If the calls begin to show up, they need to spread these bets, though, above 86, because I'm seeing weakness. So my 2 cents is probably the puts are going to show up with more volume and cause the market maker to push the tape down. I want to look at NVIDIA too. So if we look at NVIDIA's options, because that's relevant, if you look at NVIDIA's options chain, you would notice that the majority of the calls, look at these big numbers, open interest, all the big numbers right here are now out of the money, losing money. And now you have puts, and you're getting sucked into all of this open interest that you see in the puts. To exercise maximum pain, all you need to move all the way back to 185. That's not going to happen. So the market maker right now is just accommodating all of these puts right here. You have 175 as the next stop. If that doesn't hold, then you have 170. Still a big number, but 170 they're kind of closing and booking whatever money they have here. So I would say that if everything holds, you might see that NVIDIA heads down closer to 175, then it tries to rebound in tomorrow's session to exercise a little bit of maximum pain on some of the puts that will be accumulated in today's session. And that's, of course, assuming that AVGO comes out okay. If AVGO comes out bad, then we got a problem, a bigger problem that we have right now. Let's look at the futures. We see here palladium looking pretty good, copper looking pretty good, platinum looking pretty good, silver, gold. The grains should be participating, but they're not as much today, even though the dollar's down. It's really tough to rally grains at this point. But you see the other commodities moving higher, like coffee and cocoa. You see the Swissy moving up about 1%. You see the Japanese yen about 0.3%. So if you want to buy something, folks, just stick to the guideline that I gave you yesterday. And when you have confirmations in that guideline, just buy whatever you got confirmation on. Yeah, right now the indices are dominated via big tech and Bitcoin. So the indices have a unique circumstance. It's dependent on how Bitcoin trades and how Nvidia and Oracle and Microsoft and Apple trade. So you really don't need to be involved in this game right here in the indices, and just stick to the guideline that I gave you. If you're bullish inverse dollar, go with the minors. You go with some of the multinationals. You go with some international equities. If you're looking at the yield curve, you have confirmations in both ends, short and long end. So you can pick whatever you pick right here. But I would say that the long end is more likely to rebound than the short end. So if I have to speculate, it's going to be in the Russell 2000. But you have to be picky too and stick to the higher quality. You see healthcare doing pretty good today. The medical devices, healthcare is doing pretty good today in small caps. Even the defensives, by the way, the defensives within small caps are doing pretty good. But you can see OKLO, for example, anything that is related to the AI phenomenon, that's not doing so good. Cypher down, CRDO, OKLO. So I think the message is clear by the market. We got a problem in AI and big tech, but the rest of the market got a bullish confirmation from the Fed. Okay, before we take your questions and your comments, folks, let's do, how about we do the movers of the day really quickly here so I can give you what we see. So you got Oracle at the bottom of the pack here, biggest loser for today. Vertiv, another AI name that's sitting down. CoreWeave, of course, be under question now. That gas still weak. Look at that gas. Lost a lot of these gains. So we'll look at it again. But Iran, that's also data centers. That's down. MicroStrategy with Bitcoin down again about 6%. BMNR. So you see the theme here. It's these weaker names that are tied to data centers or Bitcoin are the ones that are not having a good time today. If we continue to scroll down, the theme still is the same. Open Door, Rigetti, Figma. All of this stuff is getting hit pretty. Baba's down about 2.5, but I think that's because of AI fears. But if you look at Baidu, it's actually up. We'll look at that in a minute. See weakness here across the board, but mostly dominated via these two themes, data centers and cryptos. Now, if we go to the winners of the day, you'd notice that we have, Bioheaven would like to see that. We're really close now to break even, for me at least, at the $12. So I'm happy to see it. And then when I see such a recovery, we're probably going to go ahead and close the gap. Might as well just do it. And all of a sudden, Bioheaven rises from the dead. You look at Mosaic, we already looked at that. Now, Alcoa doing pretty good. Humana, look at Humana now beginning to head to close this gap right here. So if you want to add to Humana, that's the time to do it. Visa got a confirmation from interest rates yesterday. Hyatt, that's your affluent consumer. So you have a lot of bullish themes that you could still be in and not worry about the indices at all or what big cap or AI is going to do. And if you stick with the affluent consumer, if you stick with the bullish confirmations that we got yesterday from the Fed, that's all you need to do, really. Dollar General, look at this. We're about to break above the Fibonacci, let's see here, 135. So that's going to happen. We bought it at 100. Look at this. Now it's already up 30%. Wendy's, waiting and waiting here for Wendy's to begin to show us signs of life. Could it be, ladies and gentlemen, could it be inverse on his shoulder and we begin to rally higher in Wendy's? I certainly want to own the name for 26 at least. GDX, we talked about that. I see a lot of value confirmation, of course, in the long end of the yield curve. See a lot of dividend-paying names moving up. So you get the theme here, folks. Let's segue back here. IWM. Keep it at the 5 minutes. And take your comments and questions. By the way, I see Scam Altman with Bob Iger on TV right now, so let's check on Disney. Because they think that, oh, we got to partner with OpenAI. That's a great deal. It's actually toxic. Anybody who's going to usher the name OpenAI right now is going to begin to suffer. So I think this reaction is going to fade by Disney. Anyhow, good morning, everybody, and let's begin here with Craig. Mav, do you see any base case for Tesla back below 400? The answer is absolutely. Can we do it this year? It's getting a little tougher. It's getting a little tougher, but if you break the 50 today, we close below, I would say in the bag, 420 at least. 400 could be a cherry on top, but it's going to require more weakness in Bitcoin to force Tesla holders to sell. Otherwise, it could be a target for 26, for Jan 26. So possible, but I would say 420 has a better possibility. And you're dependent on Bitcoin, of course, to flush down, which certainly appears to be the case right now. GDX worth a call lotto for tomorrow or next week, or maybe junior miners better. You can go with either, really. Both of them going to move higher, so whatever one you like and you find cheaper options on. Now, when you buy options for 1 day till expiration, you're really rolling the dice. The chart could look bullish, it's ready to go higher, but because a certain shorter time frame got overbought, so we see a pullback, and then you got your 0 DTE or 1 DTE, and you're losing even though you got the call right. The stock is going to move higher, so in this case, I would say you have to give yourself time and spend a little bit more, but you have a breakout. You have a trade above the previous high, and the dollar is giving you confirmation. So what more do you need? I would say go ahead and buy even Jan. If you go with the January debit spread and the GDX that we discussed before, the 85.90, you're making a lot of money right now. And it's not really that expensive. If we check on the GDX, if you do the Jan and you go with the 85, that's what we bought. Sold the 90. We talked about this in the stream a couple of streams ago. This was less than $1.60. So you can roll it up again if you want to go for 87, for example, and then sell the 94. It still has a pretty nice chance of profit that you can double your money right here easily. So I would say go with spreads in the GDX. Now, if you want to do junior miners, that's okay too. And consider, of course, silver miners. Silver miners could be another choice. So here for Jan, I'll go with 85 and sell the 90. You're spending 170 to make 330. Again, pretty good risk versus reward. Okay, please discuss the test trade in the TG chat. I played small this week and closed with 230% worth of gains. It is an alternative for the Iron Condor in the chop market. So you're referring to a trade that you posted right here. It's the SPY, the expiration date of the 12th, tomorrow. And what you're doing is you're buying the 82 calls, you sold the 87, and then you bought the 692, and then you also sold the 76, and then you bought the 75, 675 in the put side. This is an okay trade because you're betting that the market is probably going to hover in a really tight range, but with a slight bias to the upside, and that's why you have more coverage in your call side of the equation versus the puts. It's an okay trade. It's not a bad trade, and if you can manage it pretty good and squeeze out 100, 200% worth of gains fast, good for you. But we're going to stick with the traditional here, Iron Condor, because it's easier to manage. It's easier for new traders who are not really experienced with the options market to just go in Robinhood and look at Iron Condor and do it right there. So I think that the Iron Condor is still a solid idea. I would do it in the Qs, though, not the SPY, because the Qs will give you more. But you got to remember, For December 19th, you're running out of time. So you should have sold the call leg already. Now the question is, when are we going to sell the put leg? So suppose that we go down to the 50 and then we find a little bit of support. At that point, I'll be ready to sell the put leg of the Iron Condor with the next week's expiration, and that's it. And I think that the market at the end of the day, it's probably going to head down and then consolidate its way all the way to the end of the year because there is no selling appetite. You see it even today, even with the weakness that we see today and all of the warnings that we have today, you're still not seeing that aggressive selling appetite. Problems in Bitcoin, problems in NVIDIA, problems in Oracle. Still, the market is not finding a huge volume of sellers. We talked about this before because a lot of managers don't want to sell before the new taxation season. And they're going to try to do whatever they can to hold all the way to the end of the year, and then in January, they're going to begin to sell. So January is probably going to be an ugly month either way. But this is why I say that my outlook is probably going to be chop, because the market says sell, the algorithm is probably going to sell, but the manager is going to be hesitant to sell. So you're not going to find that volume to push the market in an aggressive way to the downside. Hey Mav, what could be your top 3 practical end-of-the-year tasks for open options? Stocks from tax perspective. Well, here in the U.S., if you have losers, right, if you have losers in your portfolio and you really don't want them anymore, you don't see any bullish case anymore, there's tax harvesting as a strategy, which you sell your losers to lower your tax bill, but you got to really talk to somebody who knows about taxes. But it's really the brackets, and if you take a loss, can you go to a lower bracket and then reduce your taxes? So that's one strategy that we do before year end. The other strategy would be, of course, once we head, so we have next week will be options expiration. So that could be an ugly week. And by ugly, I mean that little pullback that we're looking for. And then after that, it's going to be autopilot. So I think in the 19th, after the 19th, you're not going to see a lot of moves. Everybody's going to be in autopilot and the algorithms will do the job. So there are a few moves to do between now and next week, not the end of the year, but next week. And I would say that would be, look, if the VIX right now trading at 15, that's the lowest reading in the VIX that we've seen in many weeks. So it makes sense if we anticipate that Jan is going to be an ugly month because the managers will sell for the new tax season. And don't forget that we have in the U.S. here, we have a midterm elections. And midterm years are not pretty good for the market. And now you have a midterm election that is really unique, where it appears that the Republicans are probably going to eat a shellacking and lose big time. And the Democrats probably going to be infiltrated and try to push the socialist wave, the new wave that you've seen in New York City, probably going to see more of that. So the market is not going to love any bit of that. So Jan is probably going to be an ugly month. And this is why we say that if you have longs and you have the VIX like this, you want to take advantage in hedging your portfolio and buying some puts with February's expiration. On some of the names that you have gains on that you want to lock, or names perhaps that went way too far, and if you have a pullback of 10%, 15%, it might ruin your gains. So that's what I advise all the way to the year end right now. I would not advise you to go ahead and buy and open new positions because that's just a fool's errand at this point. I would say right now it's more of taxation strategies and portfolio protection strategies for Jan. Okay, hey Mav, I'd like to add gold miners to my GLD puts. Any suggestions, or do we go with WPM? I only have WPM, to be honest with you. I don't have anything. I don't have the GDX. I don't have anything, but I'm happy with WPM. It traded exactly as I expected, and it not only has gold exposure, it has silver, it has copper, it has many others. So, yeah, WPM, I mean, do you buy a chart when it looks like this? Not really, but again, it's been proven, right? We've seen pullbacks in gold and all of that, and WPM worked out pretty good. So I would say, yes, stick with it. Now, if you want to look for dividends, for example, you'll find some of them here in the gold miners. If you go dividend because WPM doesn't pay a good dividend. So if we do dividend, you're going to see here that we have Anglo Gold 3.5, NEM gives you 1, Barrick Gold is going to give you 125, HMY Harmony Gold Mining, although that's overseas, so we'll look at that in a minute. HMY and AU. So Harmony's trading the same way as WPM. It just pays a higher dividend. This is a company based in South Africa, and then you have AU, obviously also pays about 1%. And again, it's multinational, has a lot of exposure all over the place, so that's another way you can play it. But you see the similar patterns. So it really depends on your preference at this point, because the dividend yield, I mean, you're not going to get much from the gold miners. 3.7 is the highest you're going to get. But the quality of the miner is going to go down. So I'd rather you stick with the big guys. You have Newmont, you have Barrick, and you have WPM and AU. Or stick with the GDX. GDX is not going to pay you a dividend, but it's going to diversify your exposure so you don't have your eggs in one basket. Let's say if one miner has a problem with a certain mine or a certain accounting fraud or whatever, you're not exposed to that alone. You have exposure to other gold miners. GDX, by the way, is going to pay about 0.5% in dividend yield. So, again, as a gold investor, I'm not really expecting a dividend, to be honest with you, but just for your consideration. IWM Holding, let's go back here and do the SPY. They're trying really hard to close that gap. Let's see if they're going to be successful or not. It really depends on Bitcoin. Bitcoin right now looks to me that it's getting rejected from 90,000. See here? These wicks. We're not finding buyers. We're finding sellers at 90,000. So if this dynamic continues in a few minutes, you're probably going to see it give it up here in the pursuit of 90,000. That could be a negative for the SPY. Okay, what do you think the chances that AVGO might jump above 430 after earnings? Look, when it comes to earnings, everything is possible, but if we want to look at 430, I'm just going to give you realistically here, looking at the options market, this is what dictates how far the stock is going to jump. So if we do the 430, you need to go out of the money. So we're going to look at 50 strikes here. And I want to look at the 430. I mean, you have some volume, right? You have some options volume right here. It's a possibility. It's a remote possibility, but it's a possibility. Because you have volume that the market maker could view as, oh, I'm about to get squeezed, so let me just buy all the way to 430. Now, when we look at the technicals, though, you have to be a little bit careful here. I think AVGO is going to produce a better result than a lot of folks expect. I'm just not sure about the reaction of the stock, because it might have gone way too far and priced in any good news. But there's no doubt in my mind that this is going to be a pretty good report, and they're not going to miss like Oracle did. But again, this is really a toss-up. I can't help you a lot here because it's guessing at this point. Is the bar way too high for whatever results they're going to put? That means that the stock is probably heading down. Or is the result and the market share that they're getting from NVIDIA because of the custom-made chips that they do is catching steam, and it's way better than expectations, then sure, you can go AVG or can head back to 420, perhaps closer to 430. You have to remember that this is a name that used to be a value name. It used to be one of those chip names that value managers used to love to buy and never really moved until recently with the AI mania. But throughout all these years, I remember AVGO was sort of the chip value. What am I going to do about it? I'm probably going to wait till earnings come out. And if we go down, I'm probably going to sell puts, naked puts. Let's say we go down to 380. I'm going to be selling the 370 or 75 puts. If we pop higher, let's say to 410 or 420, I'm going to sell a 5 delta or 10 delta naked call on top of that to short it at that point. So that would be my approach, because I think at the end of the day, AVGO probably going to consolidate within a wide range like this for a little while. And if it goes down and you sell a put, that's okay, because if it goes down a little bit more, you buy it and it bounces back. If it goes up too much and you sell the call, that's okay, because it'll probably come back within range. Bitcoin, here we go. Looks like a rejection, so SPY doesn't like it, and that's going to impact NVIDIA negatively. It's impacting Tesla probably negatively. And don't forget about Palantir. That's another one that's being held by the same group of people here that hold Bitcoin. Quick, what is the best way or timing, to enter the XLU? I would not recommend the XLU anymore, because the XLU right now, what are you betting on? If I may ask, what are you betting on? Are you betting on classic utilities, or are you betting on the energy theme for AI? If you're going to go with the energy theme for AI, yesterday you got GE Vernova with a pretty good report, with pretty good guidance, rather. So you might want to go with GE Vernova. You might want to try with Constellation Energy, although this chart is kind of going to be under question here. If Oracle is not going to spend any more, if they have to reduce spending to please investors, and Meta's already kind of doing the same, then you can see demand for that energy is going to go down. So I'm not super bullish here on the energy side of utilities. I would stick to the classic side, the defensive side. So this is your AI corner of utilities, VST, Constellation, TLN, OKLO, but then you have the classic utilities. Those I think worth keeping. And the name that I own right now is Duke Energy. Dominion is good. NextEra I'd avoid. AEP is pretty good. So let's look at some of these charts right here. AEP looks like a falling knife still. I don't think that it found support. If you look at Duke Energy, still not finding support. Also falling knife. If you look at Dominion, a little bit of support. So between the three, I'm probably going to go with Dominion right now, because it's the only one that has confirmation that it's done going down. The falling knife is over, and it has a bullish engulfing candle right now. So my pick, Dominion Energy. Okay, Mav, holding TLT 88 puts for tomorrow. Should I move on or roll to December 19th? Yields are down today, so you see that the TLT gapping higher, but it's losing a lot of steam right now. You have the 88 puts for tomorrow. Realistically, not going to happen. Okay, so I would say right now that we have declines in the TLT, you're better off taking whatever money left in that trade. And as far as rolling it to the 19th, you could do that. But I don't see any data that could spike yields significantly higher. So it might be a bet that it's not worth being in, and you just should move on and do another trade. Good morning, Mav. I hope you're doing well. Do you see OWL being positively affected by the rate decision or reduction, or continuing a negative reaction because of the data center narrative? Shorted at 15.9. So you got a pretty good short here. And I think that OWL is going to be impacted more by the data center stuff, because their biggest project, their biggest investing scheme right now is the Meta project. And I think that Meta is getting squeezed right now, and they're going to have to slow down spending on that project. So I would say that when it comes to OWL, what matters, of course, the interest rate decisions help them out. But at the end of the day, it's the exposure to AI that's going to matter the most. And that's the net negative. So I think you got a pretty good short here. Stick with it. You're probably going to have to add to that short pretty soon. Mav, what is your take on the moves in Carvana? I'm puzzled with all the insider selling, and the stock just keeps nonstop climbing. Look, there's a lot of manipulation in that stock, and there's a lot of short covering going on too. And now with the inclusion of the S&P 500, there are managers buying. So it's really the balance between buyers and sellers. Yeah, the insiders are selling from time to time. You see some reactions when they sell. But at the end of the day, when you look at option market activities, you look at the inclusion of the S&P, you look at short covering. All of these are buyers, and they outnumber the sellers, and therefore the stock goes up. Is Carvana due to go down and crash? Yes. When is that going to happen? I think it's going to happen in 26. So what is the appropriate way to short it? I think it's going to be around Jan or February when we see reversal candles in the weekly and we begin to short it. So I'm waiting. I'm not making a decision right now, but I understand the frustration if somebody has puts already or they shorted the name already. I understand the frustration, but it's going to go down. It's just going to take a little bit of time. SPY beginning to flirt with the 85 right now. So what's going on with Bitcoin? Yeah, Bitcoin not doing so hot. So, and now if we look at Venezuela conflict increasing, how far do you think it goes? I think at some point we're going to have to do action. I mean, I'm talking the administration. So my 2 cents is you're going to see action in Venezuela. It's just a matter of when, not if. And CVX is the way to play it. Folks, we'll be back in a minute here. Just give us a minute. Okay, we're back. And again, go back to the question for Venezuela. Yeah, I think it's going to escalate. There's no way around it. So it's just a question of when, and that's going to spike the price of crude. We're already seeing some tensions with the tanker. Crude is down today, but this is why we say stick with Exxon, Chevron. Those are the ones that are going to hold pretty good. And if there's action in Venezuela, they're going to benefit the most. Small, you say that you closed the whole trade and opened a new weekly. We'll go testing so far. Superior to the Condor because it's a put credit spread. Reward is 1 to 3 fourth and above 40% chance. Yeah, it is, but this is a short-term strategy, right? This is for 1 day expiration, for 2 days to expiration, so you can't really do it for a longer expiration date. If you're going to do it for longer, like a monthly expiration or a week or 2 weeks, I think that the Iron Condor is the one that's going to serve best. Don't forget about the Iron Butterfly. That's also a pretty good strategy that could serve better if you think that we're going to stick within a range. You just have to pick your strikes correctly. It looks like, Mike, you say it looks like the Dixie weakness is sticking. Does that mean green light into anything dollar inverse? Certainly looks to be the case here. I mean, if you look at some of these assets, we just looked at them earlier. Freeport, McMoran, copper, that's blasting higher by 3.5. If you look at copper, that's also blasting higher. So where do we see participation? We see the metals participating today after getting this confirmation. So the metals are okay. Now, some of the international equities, if we look at the ETFs right here, some of the international is not doing pretty good, and that's because maybe involvement in AI. Now, a lot of these countries also invested in U.S. tech, so when U.S. tech goes down, EWY, Korea, of course, is the best example for that phenomenon, where most of them are invested in U.S. technology. So that could be a problem for some of these internationals, but European equities doing okay. EWZ is probably the one that is tied to the dollar the most. So if we go here and look at the EWZ, the Brazilian ETF, took a whack recently, but it's still within a positive pattern, a breakout. So EWZ also pays a really good dividend of about 4.9. So I would say that, yeah, we have confirmation when it comes to the dollar. We have confirmation when it comes to the bond yield, short end, long end, doesn't matter. At least for now, we do have a confirmation. And this is why you see the IWM is trading positive today. Okay, Mav, Keymaster, what are your thoughts on FNV, no operations, collect royalties in wide range of miners, so provides exposure to gold without the operation issues? I'm not a fan of it. I mean, it's moving higher, right? It's moving higher along with other gold, same pattern. So if you like it, that's okay. But the problem is when you invest in a company like this, what is the benefit really? Why do we choose this over WPM? Because they don't have any tangible assets. At the end of the day, collecting royalties, you can do that however you want, but the appreciation of gold miners is happening because the value of the gold in their mines is moving up. So Franco-Nevada is benefiting from that phenomenon, but not directly. So I'd rather be with an actual miner with the actual gold reserves. That's going to stick and be a safer asset to hold than Franco-Nevada. Craig, man, I really want to short DIA, that's Dow Jones, at this level. Apologies, folks, if there's a lot of noise. I don't know what's going on. It looks like Die Hard is happening outside. But anyways, if you want to short the Dow Jones, yeah, that's not a good idea because you have your value stocks going up, the dividends are going up. So stick to the Qs, right? The Qs is the weakest link right now because of the AI concerns. And if there's downside, I think it's going to be led by the NASDAQ. Hey, Mav, since the dollar is confirming the decline, are you doubling down on your metals holdings? Thanks. What should I double down on, though? Right, because we already bought Alcoa at a really good price, so we bought it right here. So I'm not going to double down right now. I have a pretty good position. FCX, I've been holding that since 2020. So the SLX Steel, I've been holding that since 2020. So I don't need to double down right here. And what I would double down on could be a laggard, the loser right now, which is Mosaic. Right, that's been lagging. So I could be doubling down right here and adding to my shares. Dollar goes down, Mosaic is going to go up. Another sector of the market that's been really lagging, but a lot of you wanted to buy, and they kept saying, hold, don't buy, not right now, is the chemical side. I think that this is the time that you might want to nibble on Olin, OLN. You have an inverse and a shoulder pattern. You have a gap that you're probably going to go ahead and close at around 23, 24. You have a stock that benefits when the dollar goes down, and you have a stock that pays a dividend of about 3.7%. So this one is another consideration for me to add to the long portfolio. Okay, if you could trade the Russell 2000 futures versus any other future daily, what would you choose? I only trade the Russell if in a day like today, right? When we have confirmation by the Fed that the Russell is going to be positive. When the Fed says we're going to buy in the short end of the yield curve. Okay, I might add the IWM to my IRA right now, all the way till Jan, but you also have to be careful with that. You have to be a little bit picky. So if you're going to trade the futures, I trade the futures in the IWM when we have days like today, when we have confirmation in the short end of the yield curve. But most of the time, I'm trading the SPY or the Qs, NASDAQ futures, S&P 500 futures. Those are the ones with the highest volume and the juiciest trades that you can make. So I stick with the big guys, unless, of course, there's more clarity on the short end of the yield curve in the bond market. Then the Russell 2000 becomes an easier trade. Okay, Carvana is the only trade this year that I got hurt. Took half of my Oracle gains. FRs, be patient. Your time will come. Yes, I agree with you. It might be painful right now, but I think that your strikes still have time for expiration dates, the calls that you sold. And I think they're out of the money right now still. So it's just a matter of time before Carvana goes down. And I think that when I say matter of time, by the way, folks will say a matter of time, that means maybe the stock is going to go another $100 higher. No. I'm saying that for this calendar year, they're not going to sell Carvana. It just got included in the S&P. It's a winner for the year. There's no incentive for anybody to sell. But think about Jan. You head to the next year. Anybody who's sitting on gains in Carvana knows that the economy is weaker, that the fundamentals in the company is weak, and the valuation doesn't make sense at all. So you're probably going to see a huge selling operation once we hit the Jan next year. Okay, DDS double top with a topping candle. Time to short. That's Dillard's. We've been waiting to short this guy. You say double top, maybe, but we have to wait for confirmation. I mean, this name been going and going and going, so I've been careful not to short it because it's going to cost me about $700,000 at least. With the margin, it's going to be over $1 million. So I'm not going to do that unless we have a really solid confirmation. I'm looking at the weekly chart, by the way. When I see a topping candle, I'll let you know. And I'm going to add it to the short portfolio, but it's going to cost a lot of money. So I don't feel that I need the rush to short it right now. In the options market, if you want to buy puts, the volume is not pretty good. So for now, unfortunately, we just leave it as it is until we get a solid reversal candle and then short the name. Now, SNDK, please. SNDK, not doing much today. On the daily chart, we still have the same pattern that we talked about before. So you have your impulsive rally, pullback, consolidation, what we know as a bear flag pattern. If the sentiment doesn't improve, if new buyers don't show up, then what happens? The bear flag plays out. And at that point, you have to look at your Fibonacci retracements and take some of these reactions right here from the breakout, shall we say. And now you're probably going to head down to 195 and then break below to 167.5 and maybe close the gap right here. So I see more downside to come in SNDK unless, of course, there's some improvement in the narrative. And that could only come from AVGO at this point. We have more demand of memory. So there is still, if you're bullish on the name, I guess, you have a case that it could move higher and retest the highs. If you're bearish, you still have your thesis intact that this is a bear flag pattern. It topped. Valuations don't make sense. We're questioning the spending on AI data centers. And this is probably going to have another big leg to the downside. We haven't been doing much here in the SPY. Bitcoin lost 90, finding a little bit of support right around here, double bottom. Let's see if that's going to hold or not. If it doesn't, we got a problem because we're going to seek another support, and That's going to be around here. That's going to be 89,000. So let's see how this is going to pan out. Do you have any suggestions for people who don't have many long-term positions just entering today? Just Mosaic and Allen, you really don't want to open a lot of long positions right now, because my hunch is we hit the next year in January and we have a sell-off. So whatever you buy right now, it's going to be down by the time next year opens. So you have to be really, really selective. And if you're going to open something, you're going to have double confirmations. So anything related to the dollar right now is okay, because you have confirmation. So if you want to go metals, if you're going to go resources, I would say that's okay because you got confirmation. The IWM, honestly, it has confirmation, but I mean, you look at the all-in-all pattern, and we're still holding an inverse in his shoulder. Yeah, we went down a touch, but we're still holding an inverse in his shoulder. And furthermore, zoom out, plug in your indicators. It could be bullish momentum after all. It could be that we hit the 26, we get an inflation data, and inflation data shows out that we have higher inflation than we anticipated, and all of a sudden we see a rebound in the 2-year, and the IWM comes down. So I think the most solid corner of the market right now is the inverse dollar trade. Those are the ones that you can buy right now and at least have the assurance that you're going to have a rally big enough, 5, 6, 7, 8, maybe 10% plus all the way to the year end. And if you have a pullback or a correction in Jan, by the time your stock goes down 2.5%, you know it's time to book gains or have a hedging strategy, and you're going to still be okay. But if you buy a regular stock, let's say the big caps right now, Apple or whatever, and then comes next week and the indices are sold, you may make 2% all the way to the end of the year, but then comes January, you're down 5, 6, 7%. So stick with the dollar theme right now. Jeffrey, SPY already frustrating. Seems like a market maker wants to keep it tight at 685. Yep, we talked about that. 685 is, by the way, the maximum pain. So they're not going to move the tape one way or the other unless one or two things happen. Either you're going to see volume showing up in the puts. That's what they're waiting for, really. Who's going to show us volume right now? And if you look at today's expiration date, the 11th, we see big volume for the calls. We see big volume for the puts. So it's a competitive battle. And the market maker wants to wait and see here, frustrate these holders as much as they can by keeping the price at the neutral zone, which is 685. Because if you park at 685, look at how many open interest that you're going to make a loser in the calls. And if you park at 685, look at how many open interest you're going to keep as a loser in the puts. So that's what they're trying to do right now, frustrating. But if the put volume shows up, they're going to have no choice but to push the tape down to 683. The other dynamic that could push the SPY down is Bitcoin. So watch for this double bottom right here, this support. If we take that out, then we have a confirmation that the 90,000 is a no-go. And that's going to produce a flush in Bitcoin. If that is the case, I think that SPY is going to flush too. If we lose 83 today, there's a huge possibility that 680 could be on the table as soon as today, but certainly for tomorrow's session. George, you got in here late. I have my bearish trades, did not jump the ship yesterday. Good for you. Do you think my 680 puts December 26 still good, or do I need to move the date? You really don't need to move the date because you're close enough. 680, December 26, you still got time. But you need to see certain things before the weekends. And I would say that you need to see the SPY below 683 by Friday, tomorrow. If that is the case, you probably want to double down in that trade because comes next week, we're probably going to go down. I mean, by Friday, we could be at 680. But if that is the case, then we're probably going to sell even more. I showed you the data yesterday from the CTAs. They're going to sell a lot in OPEX next week if the market continues to head down. So I think you got a good one here. You don't need to do a lot of fixing in it. Keep it as it is. Mav, are the puts growing in the queues? Can we look at the options data? So if we look at the queues with the expiration data today, the calls have pretty decent volume, but the puts have higher volume, higher open interest. So Yeah, the volume is inside the calls, but the open interest is most importantly dominated by the puts. And we have volume here that could keep pushing the market maker to sell even more. And that could go all the way, by the way, to 615. So there is still a case here that we have more downside to come in this tape. But I would say that the market maker is going to try to at least fight really, really hard to keep it at the neutral zone, 685. That's the SPY and the Qs. Keep it at 685 as long as they can. Because if they keep it at 685 for a few more hours, most of the calls and the puts will bleed to death. They'll be worthless. At that point, they can do whatever they want. Move it up, move it down, depending on the risk that they see for tomorrow's option spread. The only thing that would force them to move one way or the other, and let's be realistic, we're talking about the downside, not the upside, because the upside, the volume is already here. If they wanted to move to the upside, they could have done that. The only way they could move to the downside if Bitcoin shows more weakness. Okay, UNH, inverse head and shoulder, worth a shot. So if we look at UNH, you say that we have an inverse head and shoulder. Let's see. Daily chart. Yeah, we do have an inverse head and shoulder. It's a good spot. Inverse head and shoulder. You got your neckline. And if you break out from here, take a measurement, head to the neckline, and then take that from the breakout. Oh, that could lead you all the way up to about 370. So yeah, there could be more upside coming in UNH. Okay, Mav, what is the time frame for holding JetBlue, GBLU, or JBLU? It has been doing great. You're up over 20%. Listen, I'm going to keep JetBlue until somebody buys it. I think it's a company with, it's down today, but if it's a trade for you and you're up 20% and you're done with it, then mission accomplished. Take the money and go. But for me, I mean, I've been through a sell-off since I've been holding JetBlue. And I think at the end of the day, the assets versus valuations for this company, it's valued at 1.7, 1.8 billion. They have assets of more than 25 billion. I think somebody's going to buy the company. One of these airliners, be it Delta, be it somebody else, is going to buy it. It's just a matter of time, not if. So I'm willing to wait and hold all the way to the big reward. I mean, you look at WBD and how it traded with a bidding war. I think that JetBlue is not going to have a bidding war, but it's going to have a buyer who's going to push the price all the way 6.5, maybe 7, maybe above. But like I said, what is your goal from the investment? You have to have a defined goal. A lot of folks don't have that. When they buy something, the price keeps going up, and they really don't have a goal. And they only begin to make decisions once the stock begins to reverse and head down. And now, should I sell? An easier way would be, what is your goal from the trade before you enter? And if your goal is to make profits, well, you just made profits. 20% is pretty good. Let's take it and leave. If your goal is, no, I'm betting on a certain outcome of somebody buying the company like I did, then you have to wait for that outcome. Small family, look at that. You're taking notes, checking that out. Violence, also a question in JetBlue. Is somebody accumulating a position in JetBlue? Well, somebody's dumping today. So somebody's dumping JetBlue. So maybe they bought, now they're dumping. I'm not seeing any piece of news right here. Let's check on other airliners and see what's going on. There's no problem with Delta. There's no problem with UAL. So it could be a JetBlue issue. It could be a piece of news they're about to hear about a certain plane in JetBlue that did something. That could be it. But at the end of the day, again, thesis is somebody's going to buy the company, and that's why we see folks buying it and accumulating a position in it. Bitcoin still holding. The SPY is still holding. The VIX is not doing much. Nvidia at the lows of the day. Oracle probably going to sink down to the lows of the day. Apple beginning to recover. Microsoft not doing anything. Tesla just following Bitcoin. Right now, Bitcoin is holding, so we're holding. But another leg down in Bitcoin, you're probably going to see Tesla breaking below 440. Mav, give you take on silver. Look, right now we have a confirmation, right? You look at the dollar. The dollar is down. So you could rebound a touch, oversold, got it. But at the end of the day, this is a confirmation that the dollar is heading down, and you have the BOJ coming out next week, firming up the yen, so the dollar is going to go down even more. So I would say, yeah, you have a confirmation for silver to buy. I would say buy via increments, because you're probably going to see a pullback when the dollar rebounds a little bit, and then it goes higher again when the dollar begins to dip once again. So you don't want to go all in a position in silver. And a lot of folks go with the SLV, but they ignore the silver miners, SIL. I would say that you might want to mix it up. You buy some miners, you buy some SLV, but the key is buy via increments. So divide it in 4 increments and enter the first increment right now, since you have a confirmation. Once you see a dip, you probably want to deploy the second increment. Once you trade above the previous high, you deploy the third, and then at a later date, you deploy the fourth. And you have a pretty good position at the end of the day in silver. Okay, Patreon Firecat, you say, how about Campbell's Soup? It appears below the 2010. So we're looking at Campbell's Soup here. A lot of you asked this question before. You want to buy Campbell's Soup. The problem with Campbell's Soup is the margins are really low. And their margins continue to go lower because of the aluminum tariffs. So and they can't really pass that to the end consumer. They can't raise the price. So this is a dilemma in all staples, but specifically for Campbell because of the aluminum tariffs. A better buy would be Alcoa, right? That's aluminum. So they'll pay more for the aluminum and they accept lower margins, but Alcoa benefits from that. So I would say stick to aluminum plays and avoid Campbell's Soup. Bitcoin finding a footing, so the SPY finding a footing, but Nvidia still at the lows of the day. I would say here, folks, we really depend on Bitcoin. And if it breaks this support right here, mark it down in your chart. If we break it down, we got a problem. Now, if we trade above 90,000 again, okay, then we're out of the woods and we might see the SPY trying to close this gap. But it looks to me that Bitcoin already tried to retest that support or that resistance right now. Over and over, it didn't work out. So we'll see what happens here. But now you know Bitcoin really dictates what's going to happen to the tape today because the reaction from Oracle and NVIDIA is already absorbed. And the options market is not showing much. The options market says 685 is maximum pain. We're already at 685. So it really depends on how Bitcoin is going to trade from this point on. And that's going to move the tape. Hey man, if I just joined late, Vinus, and you said, did we cover MOS? Yes, we did. So we talked about the dollar inverse trades. All of them have confirmations right now. This is why we see Mosaic heading higher. So if you want to add, I would say yes, you have a confirmation. A big pop like this with high volume indicates that buyers are coming in. And you should be adding to your shares of Mosaic. Anyhow, folks, we're just going to wrap it up right here. Now you know what to look at. Bitcoin, can it make it above 90,000 again? Or will we see sellers breaking this support right here at the double bottom when we head down? That's really what's going to dictate what's going to happen with the tape today, because I don't see any other indicator that is moving one way or the other that is telling us that it's going to impact the tape and the indices one way or the other, besides Bitcoin. So all eyes in Bitcoin, folks. But for now, if you don't have any questions and comments, we're going to wrap it up right here. We'll be back in about an hour in Discord chat session, so stay tuned. But thank you for joining me in this session here of the stream. Appreciate and love all of you. Good luck with the rest of the day. Take care.